Okay, in this video I'm going to go over the personal income and spending report. This report comes out from the Bureau of Economic Analysis every month, and this is the same government agency that gives us the gross domestic product report. And the essence of this report is it shows us the income that is for the most part flowing to households and what households do with that income. Where do they spend it? So let's start with some basics. Table 1 is the most important of the tables we'll look at. Note that the data is in billions of dollars, and it looks like over here we have the various categories of income, and then we have the various months. This is 2018 and all the way to January 2019 data. And also note that we are in seasonally adjusted annual rates. Seasonally adjusted meaning we've adjusted for changes due to the seasons, and annual rates meaning we've taken whatever monthly figure we get and multiplied it by 12 to annualize it. With that in mind, let's take a look at the broadest category, which is personal income. Personal income is households receive pre-tax. So this is something that is available to households before they pay their taxes. Now, if we break down personal income into its constituent parts, you've got these lines here. So let's just take a look at these. And you can see it with the indentations as well. For example, line 2, compensation of employees. Okay, so that's part of it. Then we go down to the next indentation, which is line 14, which is proprietor's income. This is essentially income generated from business. And then 17 is rental income. This is income generated from renting out land. And then line 18, personal income receipts on assets. This is portfolio income. Either you're getting it from interest or from dividends. And then we have line 21, which is personal current transfer receipts. This is money you're getting from the government. And then we back out line 30, which is contributions for government social insurance, domestic. So that makes up total personal income. Now, if you look at the subcategories, okay, of each one, like compensation of employees, you can then break it down even further. So for example, this is lines 3 and 11. Just look for the next indentations, wages and salaries, and supplements to wages and salaries. And then you can break down wages and salaries, look for the next indentation, private industry and government, and so on and so forth. So be very careful when reading this document because the indentations tell us what we're decomposing. All right, with that, let's now look at some numbers. So personal income in January 2019 was $17,992.9. Of course, these are in billions of dollars, so we need to add 9 zeros. If you do that, you get 17,992,900,000,000. And it looks like that is down from December 2018. In some instances, we may want to calculate that change. To do that, you use the basic percentage formula that we've used in other examples for GDP and some other reports. You take the later figure, 17,992.9. You divide that by the earlier figure, 18,016.6. And that gives you this number. Then you subtract 1. Okay? So it's the later figure divided by the earlier figure minus 1. Okay? Now, that's in decimal form, but if we want to turn that into a percentage, we just multiply by 100, and it looks like we get negative 0.1% because it'll round to the 10th. So it looks like personal income dropped by 0.1% from December 2018 to January 2019. Okay? Another thing that we may want to do is calculate the relative slices of the pie. For example, personal income is the pie, but what if we want to know how much of personal income is represented by compensation of employees? Well, we just use a basic calculation calculation there, basic percentage calculation. So we're going to take the compensation of employees, 11,095.5, and we're going to divide that by the total, 17,992.9. Okay. So that gives us, if we want to convert it into a percentage, gives us about 61.7%. So 61.7% of all personal income came from compensation of employees. Okay. And you could find out even more. You could say, well, of compensation for employees, what fraction was wages and salaries? You take this number and divide it by this number. Okay, so get comfortable with those calculations. I don't think anyone's surprised that compensation of employees is a big slice of the personal income pie, because most people go to work and sell their labor either for wages and salaries, right, or other supplements from their employer. Now, if we continue down, you'll notice we've got proprietor income, so that's a much smaller portion of the total compensation, businesses essentially. And then rental income, very small portion of the total. This one here, personal income receipts on assets, is an interesting one because it's a return on wealth that people hold in the form of stocks and bonds. And you could also say bank accounts. So, for example, almost $2.8 trillion flowed to the holders of stocks and bonds. $1.6 trillion in interest income. That money is typically flowing from bonds or from bank accounts. And then 1.1 trillion in dividend income. That money is flowing from stocks. So sometimes this is called passive income, right? Because it's income that you're not working for. It's coming from assets that you own. And then we go down a little further, and you'll notice we have personal current transfer payments. This one is a decent sized number, 3 trillion. So if you think about that, 3 trillion out of a total of 17, almost 18, what is it? I'll just do a crude figure here, 3 divided by 18. So that's about 17% of personal income is coming from the government. It's coming from transfer receipts in a variety of forms. Looks like the big one here is going to be, let's see, this is the overall, because remember it breaks down by indentation. So government social benefits to persons, and then other transfer payments from businesses. But generally, these transfer payments come from government, not from businesses. And the big one here is going to be Social Security. No surprise there. Over $1 trillion in annualized January figures, January 2019. January 2019. And then the next big one is going to be Medicare. Okay, so those two very large government programs that provide either funds or services to people. But that's part of income. Right? That's part of personal income because you're getting value from the government. All right, continue on. Now, if we want to take out taxes and get to what we call disposable income, we can do this very easily. Simply take line 1, which is personal income, right, 17,992, and then back out line 31, which is personal taxes, okay, and that's 2,085. And if you do that, you should get 15,907. Okay. So disposable income is a better indicator of what households actually have to spend, right? Because even though personal income comes in, a lot of that goes to the government in the form of taxes. So 15 trillion, almost $16 trillion in disposable income here. Okay, so that gives us a sense of income. Now, what do people do with it? Well, this is the personal outlays, and we're going to have to, as of this report, we don't have January 2019, so we're going to go ahead and go over here to December 2018. And notice here we have 15,942 in disposable income, and then it gets broken down. Okay? And it gets broken down into the following categories. You have personal consumption expenditures. Okay? You have personal interest payments, right? Payments, not interest being received, but interest going out for debt that households have. And then personal current transfer payments. So these three together would equal the personal outlays total. Okay, now, as far as the next category, personal savings, this is easily derived by taking disposable income, which is, remember, post-tax income, and backing out personal outlays. So line 32 minus 33. This is the amount of savings available. In other words, this is what's left over by households after they've spent on their personal outlays. You can also look at it as a rate. So if we take this 1205, 1.2 trillion, and we divide that by the actual disposable income, which is 15,942.2, then you get 7.6%, right? You could again multiply that by 100 if you want and round to the 10th place, so 7.6%. So that means that there was a 7.6% savings rate in December of 2018, and that's up from November. But you can see we're kind of hovering in a similar range here, but it definitely ticked up a bit. Savings is an important part of a healthy economy because recall that if households are saving, that those funds are going to firms or made available to firms so they can get capital equipment, machinery, buildings, and so forth to produce more in the future. So this number going up is helpful as an indicator of future economic growth and prosperity. It's kind of what fuels an increase in potential output long term. Okay, let's keep going. Now, if you scroll down a little further, you'll see personal income, disposable income, stated in different ways. This line here shows it's stated in fixed 2012 dollars. We call that real disposable personal income or chained disposable personal income. And what it does is it removes the influence of price changes. For example, if you go back up here to disposable income, it went from 15,769 in November 2018 to 15,942 in December. Well, that's an increase in disposable personal income. But this just tells us people got more dollars. It doesn't mean that they have more purchasing power. It doesn't mean that those dollars went further because prices could have went up. But what if we take this data and we look at it in 2012 prices? Well, in that case, we actually went from 14,485.4 to 14,635.9. So it went up as well. But this increase removes any price level increases, which means this is the actual increase in purchasing power. So yes, people got more dollars, but they also got more purchasing power, which may be a more important indicator of the economic health of the economy and the household. All right, if we break it down per capita, then you can do this in current dollars or in, again, real chained dollars. Per capita in December 2018, we're at 48,546. That's nothing more than taking the total disposable income in that month, 15,942. And again, that's 15,942,000,000,000, dividing that by the population, and that gives you 48,546. Okay. If instead you take the chained disposable personal income of 14,635,000,000,000 and divide that by the population, then that would give you 44,568. And it does give you the population here, so if you wanted to do those calculations, you could. But the key is to notice that we essentially went up in per capita disposable income. So people got more dollars per person, and we went up in chained, real per capita disposable personal income. So people got more purchasing power with those dollars. All right, that's it for this report. There are other sheets, tables you can check out. Some of them do the calculations that we've completed in this class, but for the most part, this is the report we want to focus on. Let me know if you have questions. Thanks.